Well, my name is Neil Christiansen. I am with Aspire Mortgage, and the purpose of this is to really give our clients some information on anything housing and finance related, just so that you guys can make better, smarter decisions when it comes to anything mortgage or real estate related. Uh, Today, we're going to dive into a topic that I don't think homeowners really think about until perhaps a disaster strikes, which is the homeowners insurance policy. Understanding what's actually in the policy can mean the difference between being fully covered or facing unexpected costs that can really take away a lot of one's savings if it's a significant disaster. To help break it all down, I am joined today by Ben, who is with Goosehead Insurance, an experienced insurance agent who's going to walk us through the key parts homeowners insurance policy and what the homeowners should do once they have listened to this and see if their policy is in a good order. So I just wanted to say hello to Ben. Ben, how you doing today?
I'm doing pretty well, y'all. Yeah, I'm here to educate you guys on kind of what's the ins and outs of insurance. It's not the most glamorous thing. It's not something that people, want to deep dive into, but hopefully I can make it interesting, kind of educate you guys on, what's covered, what's not, the really important things there. Because a lot of people, they tend to hate on insurance after a while, and it's because they haven't been educated on, what their policy covered, and everything like that.
Good, good. Yeah. And I know that homeowners insurance policies, it just seems like it continues to go up, up, and up, and with the unfortunate incident that happened in LA and so forth, I just feel like we're all going to experience perhaps a increase in our policies. And I think it's just going to be that much more important for folks to really get a grip of their policy, make sure that they're covered appropriately, but also make sure that that policy is as affordable as it can. Would you agree with that?
100%. I tell everyone there's absolutely no loyalty in this game. I'm a broker. I understand. I can kind of see, on my side, like companies, they're not disclosing things. They're also, yeah, they're not. People aren't educated on what's happening. They don't know what's covered, whether it's fire policies, natural disaster, anything like that.
Yeah.
They're not educated on it. So I think reviewing it every year is a great idea, especially, checking like what your coverages are. And we'll dive into that as well.
Yeah, yeah. And I know here in Colorado, wind and hail is a big issue. So that's something that I
100%.
think people really need to be aware of. Well, great. Well, let's go ahead and just kind of dive right in. My first question to you, Ben, is what are the most important parts of a homeowner's insurance policy that people should pay close attention to, especially when it comes to a natural disaster?
100%. Dwelling or coverage A, as we call it. There's a bunch of mumbo jumbo and buzzwords in insurance, but I'll break it down, kind of do some layman's terms. Your replacement cost. This is basically the sticks and bricks of your home, what it costs to rebuild it. I'm sure everyone out there wants to have a home to the likeliness of what they're living in. And if you maybe bought your house in the 90s and you bought it for 300,000, the cost to rebuild it to the same square footage, so you have a 2,500 square foot house, it may have gone up to 600, 700,000, and you're not seeing that on your renewal, you're not seeing that on your policy. So you want to make sure, like, hey, is the square footage, the livable square footage, the custom bathrooms, that granite countertop that you have, you want to have that all on your policy so that that's covered. That's huge. So many people are underinsured or overinsured. A
Yeah.
lot of people are like, hey, I'm covered for, 1.2 million on your, you know, $700,000 house. And that's something that I see a lot, and you're paying more for it, but also, you're not going to use all of that. So, there's no point in having it and paying that extra coin for it.
Yeah.
Couple other things are your roof coverage. One of the things I see with a couple carriers out there, I never will, talk bad about any carriers, but some of them do actual cash value for the roof. So if you have an older roof, that is definitely what you want to do. You don't want replacement cost on anything over than, 15 years old. But you also don't want actual cash value on something that's a newer roof. Um, you basically want once it hits a certain age, like 15 years old, if it gets hit in a storm, the payout might not even cover half the replacement cost. But there's scheduled, actual cash value, and replacement costs. Scheduled is basically like on a depreciation schedule. So if it's a 8-year-old roof, you might get 80% of what a new roof will cost. And that reflects on your premium yearly. So that's huge. Actual cash value, you might get, a really depreciated 15-year-old roof. You might only get 25% of that roof. And I'm sure everyone out there is like, a 30 grand, 20 grand roof. I know a roofer and it's expensive jobs. You want to be covered.
Hmm.
Um, and then a couple other things, personal property. This is basically, I tell everyone, if you flip your house upside down, everything that falls out, couple carriers, every time they write, their go-to is, again, actual cash value. So if you have a super nice leather couch, nice plasma TV and stuff like that, and a fire swoops through, all this stuff, you have 200,000 in, personal property, it might not be covered to that 200,000. It might be, hey, we're going to go grab a Goodwill, couch and put it in your home. It's a leather couch. There you go. I spent 7 grand on, this L-shaped couch. You're not getting that same, you're not getting that same couch back at
Hmm. Hmm.
actual cash value. It's not replaced. Um, Other things that people need to know, pools, please don't have a diving board. It's a risk that a lot of carriers don't want to take, and you're going to be paying a premium for it. Trampolines have netting on them. And then if like some carriers are actually really picky about your dog breed. So if it has bite history and stuff like that, that's something that, you want to make sure you have animal liability on there and not just checked off.
Hmm.
Because that's something that a lot of people don't understand. Like liability, being sued or, anyone moving forward with legal action, if they get bit on your premises, that's on you and that's going to be a home claim.
Hmm. Hmm. Yeah, I mean, everything that you said, I'm just thinking of my own policy, and we love dogs. I'd almost have to think, I'm not sure if we have that on our policy. And then, I've been in the business for quite some time, and I can say I have still clients that are in the Superior area. And about 4 or 5 years ago is when that fire came right through that valley and took out a ton of those homes in the Superior Louisville area. And I remember calling a few of my clients, and fortunately, their homes were not affected by it, but they knew of neighbors and so forth that did not have enough policy or replacement costs to rebuild their homes. So they unfortunately had to move elsewhere. So I think what I'm getting from that, Ben, is you really want to make sure that you're just not necessarily paying a policy. Take a look at your policy and look at these coverages all the way from dwelling to personal property to animals if you have it. It just seems like they're all extremely important should something happen.
100%. And something that I do, like I take a little bit of time to go through, property assessor, tax, like assessment, because we're going to find the value of the land. We're going to, make sure the sticks and the bricks of the home are correct so that we're getting the actual, coverages that you need. It may be a little bit more expensive. Sometimes it's less, but peace of mind is priceless. And I'll tell that to everyone. It's a very important thing. One thing that I forgot to mention as well is deductibles. You mentioned kind of the wind and hailstorms here in Colorado. Trust me, I'm already seeing it. It's crazy. And if you have like a 2% deductible on a $700,000 house, 2% of that, that's
Mhm.
14 grand that you're paying before insurance kicks in. A lot of people don't understand that. Insurance companies love it because they see, like, hey, he's not, he's going to make, he's going to pay out of pocket before he gets that, makes a claim, or it's going to be
Mhm.
a total loss when he makes that claim. So
Mhm.
that's up to the person, case by case basis. If you're like, hey, I can shell out 7 grand, and fix windows and a couple shingles and a portion of my house, I know a roofer, do that because you're going to save a ton on the premium. But if you're like, hey, I'd rather, make a house claim for $1,000, have $1,000, $2,500 deductible because, I don't, I don't want to pay 20 grand. I don't want to pay 14 grand on my home. Um, it's a case by case basis. I usually recommend, like lower deductibles, but only paying out and making a claim when it's something very expensive, because those claims actually track you for 5 years. Even if you move to a separate house, they're gonna follow you, and that affects your insurance score as well as what companies want to cover you if you're making a claim.
Yep. Yeah. I mean, that's kind of leading us into the next question is, what are some of the surprises that homeowners might run into on some of their policies if they haven't really looked at it over the course of, a couple years to several years? So my question to you then is, many homeowners assume that their policy coverages all types of damages, What are some common exclusions or gaps that people might get surprised by, and how can they look at that and maybe adjust their policy to be fully protected?
100%. One of the biggest things that we see, especially around here, is water damage versus flood damage. You may be in a flood zone X, which means like you are on the top of a hill in a high plains desert. You still can get flood damage. Flood is literally any water that comes from rising water, storm surge, anything. A fire hydrant, exploding down the street. And if three properties are, hit by that, that is flood damage because it surged into your house and it came from the sides. Water damage would be water coming from above. So like rain, burst pipe, likely you're covered. That is something that most companies will, have as an addition. It's like for 10,000 in coverage. Water water claims 9,100 is the average water claim on a home, and that's from
Wow.
like that's like seepage and everything. Most policies, when they're written, your coverage is 5,000. So that's 4,100 out of pocket.
Yeah.
To
Big
change it to
surprise.
about 10,000, yeah, exactly. People are like, oh my gosh, because you're tearing up the bottom of the bathroom, you're tearing up, flooring, carpets ruined, stuff like that. It gets expensive. It's huge. And so a lot of people are like, oh my God, I have no idea that it was this expensive and I'm not covered for this, like, so flood policies are an important thing. Depending on your area, they can be like $400 for the whole year. And then extra water coverage, most carriers, it's like $182, 100, that's a very specific number, 180 bucks probably around that for 10,000 in coverage. Usually, and that's a 1% deductible on that. So $1,000 to get, that entire job done. That's something that I always recommend, and I'll talk to clients and educate them on. But that's a huge surprise that are like, and that's another thing with the no loyalty with insurance companies. Like, I heard a case where a pipe burst and it shot out of the house, landed on the ground, and seeped in through the house, and it was considered flood damage and not water damage because it had hit the ground and seeped in, even though the water was coming from above. And so, yeah, flood
How does to
flood
the
coverage.
homeowners?
Yeah, yep.
Yeah. Wow.
Flood coverage is very, very important. No matter what area you're in, it's something to always look into. Um, Couple other things is like sewer backup and sump pump failure. So, basically, if you have a sump pump failure, um, that's not covered under standard policies unless you have an endorsement. Um, like if you have like an electronic, sump pump in your basement, you want to disclose that because, if there is like sewer backup or, seepage like that and your basement's a swamp, you want to be covered, obviously.
Mm-hmm. Yeah.
Um,
Yeah.
Other things is like home-based businesses. Those are something that a lot of people don't understand. You know, if you're making something out of your home or, you're doing business in your home, that's something to disclose to your insurance agent and have on there because that's likely, extra liability because you're more likely to be in your home, more likely for there to be a claim. Um, just
Mm.
small things like that that people really don't think about that they're surprised and they're like, oh my gosh, this isn't covered. This is, um, and that goes back to the trampoline, dog, as well as another thing. If you have like collector's baseball cards, furs, super expensive things like that. I've had clients that have like, Bibles from like, the 1600s that are like, hey, this is a $25,000 book.
Mm.
Please list that. Because
Mm-hmm.
if you go to the insurance company after a flood or a fire and you're like, oh, yeah, I had a $25,000 book, they're going to be like, yeah, right. Like no
Mm-hmm.
shot.
Yeah.
If you list that, as listed personal items, you're much more likely to get a payout for that.
I mean, it's been eye-opening to hear some of these things. Would have never thought that if you're, there is so much work from home these days that I'm sure people just don't even realize that if they have clients perhaps coming to their house and so forth, how that might affect their policies
Yeah,
and so forth. So, um, okay, so there could be some gaps that people should probably pay attention to. Let's wrap this up and talk about kind of just that. What can the client do after they've looked at their policy, they've listened to this, they go, I'm not sure if I'm covered on my dwelling enough, or oh, maybe I should up my personal property deductible. What what are the next steps that that person should do at this point?
Best thing to do is really get a policy review. Insurance reviews are super easy. It's basically sending over your declaration pages. I always recommend a broker. I'm a little biased.
Sure.
But
That's
going to a broker,
brokers are
they can
great.
shop them. They can shop the market for you. They
Hmm.
have no, their duty is to you, not to any insurance company. So they are not representing Allstate or Safeco or Travelers. They're representing you. Their job is to find you the best option. And my whole thing is like, if it doesn't make dollars and cents to go with me, I'm still going to tell you, hey, you're in the best spot. Things are going well. I would change, your deductible from 2,500 maybe to 5,000. Um, you might save some there, but get a policy review. And another thing that people don't know about is insurance score. So claim history, payment habits, your credit, those are all things, if those improve, you might see improvement on your policy as well.
Hmm.
Um, and then, the cliche bundling saves, 15% or more. That is very true though. If
I
you're
think I've
getting
heard
good
that on
auto,
a commercial or something like that.
it's definitely out there all the time. But it's very true. Like if you can bundle, it's stickier business, for them. So they're willing to knock off 15, 20%, on both policies. You can save a ton.
Hmm.
And it's always worth looking. Um, yeah. Other than that, considering, higher deductibles and shop the market, reach out to a broker, say, hey, I'm looking for, this is what my deductibles are. Have your declaration pages ready, and we're here to help.
Yeah, and everyone, Ben is a broker, which brokers can shop the market. Now, if you're with as they call it in the industry, a captive agent like a State Farm or an Allstate, it's not to say that you should reach out to your current agent to also look at policies and so forth. They can do it. It's just that they may not have um, the ability to go out to other shops to see if they can get a better deal for you. Ben, I mean, this has just been, like I said earlier, eye-opening just for me because I mean, this is something I deal with on a daily basis, looking over policies and so forth, making sure that it does fit the mortgage because that is a requirement that our underwriters require. But in summary, it sounds like the best thing that someone should do after they've taken a chance of taking a look at their policy is to either call their current agent and see if they can do a little policy shopping for them. Like you said, make sure that the deductibles are as appropriate as it can be. I know from a mortgage standpoint, the affordability piece is extremely tight. It's one of the
Mm.
worst affordabilities that we've been in over like the last 30 years. So these insurance policies need to be as affordable as possible, but also making sure that they're protecting the client. I think there's a slippery slope that if you go too far down a real cheap policy, something bad happens. You're in a pretty bad spot. So um, I would just encourage anyone to call out. And if you don't have someone or you can't remember your agent's name, you haven't spoken to him for many, many years, we'll have all of Ben's information in this presentation so that you can reach out to him via phone, via email. Any last minute words that you'd like to share with us, Ben, before we wrap this up?
I appreciate y'all listening. My biggest thing is, yeah, it's becoming pretty volatile out there. The market's hard. But again, insurance isn't just about price, it's finding that balance. It's about getting it right when it matters most. A cheaper policy might save you a couple $100 a year, but if it leaves you underinsured, that's a more expensive mistake in the long run.
Mm-hmm.
Peace of mind is priceless. So focus on, getting the best value, not just a lower cost.
Yeah, agreed. Well, Ben, thanks so much for taking a few minutes here with us. I really do think this has been very valuable. I think folks that listen to this should get a lot out of it, and I really encourage them to take a look at their policies and reach out to those that can help them make sure the policy is accurate and it's the best one that they can do.